You're listening to AI PRISM from Seoul Economic Daily.
Three fronts are moving at once today: oil, rates, and Korea's own growth print. It's Friday, July 24th. Here's why global investors are paying attention to Korea today. Brent crude jumped 4.35% to $98.42 a barrel after Houthi forces claimed strikes on two Saudi tankers in the Red Sea. The attack marks the first direct hit on a Saudi vessel since the naval blockade was declared. Oil is now up more than 30% this month alone on escalating Iran-Saudi tensions. Here's what the numbers show. Brent crude at $98.42 a barrel is up 4.35% on the day and over 30% for the month. Saudi Arabia's Yanbu port ships roughly 4.9 million barrels a day through the East-West pipeline, a route analysts say becomes far less efficient if the Bab-el-Mandeb Strait sees disruption. Korea's second quarter GDP grew 0.6% quarter-on-quarter, tripling the Bank of Korea's own forecast of 0.2%. Semiconductor exports and consumption both outperformed, with net exports and domestic demand each contributing 0.3 percentage points to growth. Real GDI surged 15.6% year-on-year, the fastest pace since 1988, largely on higher chip export prices. The Bank of Korea now expects full-year growth near 3%, up from its earlier 2.6% projection. So, what does this mean for global investors weighing Korea exposure? Higher oil prices raise import costs for Korea's energy-dependent economy, a headwind that shows up in the current account. But the GDP beat signals the semiconductor-led growth story has more room to run than markets priced in. Watch whether the Bank of Korea follows through on back-to-back rate hikes in August, a scenario now gaining traction after the wide GDI-GDP gap. That's today's AI PRISM, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Ifrah award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.